All right, what is up, everybody? Divine Hood here. So, we got our rejection that I was looking at yesterday on Bitcoin. In this video, what I'm going to do is I'm going to cover Bitcoin only, and then I have a few altcoins to cover, and I'll cover them in a separate video later today. I'll make that video pretty much right after this video. But just for this video, I'm going to cover the Bitcoin and then the total market caps with just this one, and then I'll make a separate video on the altcoins. Okay, so yesterday, I actually made two updates yesterday. One came out pretty late at night because YouTube upload got interrupted and I didn't see it until I was going to bed. So I restarted the upload and it uploaded real late at night last night. So sorry if you guys missed that. But yesterday I was talking about the range and trading the range until it breaks. You know, trade the range, you guys. Do not force trades that aren't there and trade the relevant price action that's in front of you. So let's go back to the Coinbase chart here. Remember how I talked about we were starting to form this sideways range since we broke the bigger ascending channel to the downside. So let me see if this, yeah, so you guys can see this ascending channel that we had, a huge ascending channel on the daily. We broke it to the downside. We came up for the bearish back test, came up again on a higher time frame back test. You can see we wicked it. We tried one time, two times, three times, four times, five times to get into it. We had the double top on the swing failure pattern here of this high, and then that was the short that I took on, I do believe it was Christmas. I took this short of the confirmed swing failure pattern and the rejection of the bigger channel. Once we had that happen, I said, okay, guys, this is the relevant price action to be looking at right now. This range here of all of this that's developing below the break of the channel. If we cannot reclaim the channel, we are going to dump lower. And I was saying yesterday, watch, let's go back to the Bybit chart because I created this smaller, very slight ascending channel. Let me get rid of this stuff here. Okay, I created this very slight ascending channel based off the two prior lows that were made. So I started the pivot here, second pivot on this higher low, third pivot up here, and I said, let's trade this channel because this is the range that is relevant for Bitcoin right now. So when we had the swing failure pattern on Christmas into the top of this channel, I shorted up here and I said, your TP1, yesterday when I made the first video, we were at the golden pocket. So if you take the high to the low here, you can see we just spent the entire day chopping, doing a small bounce from that golden pocket. But I said, expect this to be a lower high before making new lows. And this was also the value area low of the range here. And actually, let me pull this range to about here, yesterday's price action. You can see it was the value area low of the range in the golden pocket. That's why we were holding it most of the day, and we were trying to get a bounce. But I did say, watch for a bounce up to the 0.5 and the POC. And if we hit the 0.5 and the POC, that's a correction target in a correction wave, and we might see another dump. And sure enough, overnight, you can see what happened. We pumped up to the POC and the 0.5, hit into that POC and 0.5, and now we're making new lows. We're breaking to new lows. If I change this same fib pull to a 0.786, you can see we're starting to lose it now. So this is not looking good for Bitcoin. I did tell you guys that yesterday, let me get rid of that now, and let me get rid of this fixed range volume profile. I did tell you guys yesterday that it's most likely that we come for this low because we did, if we do another fib pull from this low to this high, we broke the 886. Anytime you break the 886, so let me go to the 886 here, you can see that we actually broke below the 886 on this second pivot of the channel. Anytime you break an 886, you're more probable to come back down and take the lows that were created this low here. So that's why I was speculating heavily that we were going to come take those lows. Also, we did have our liquidity that was resting down there, our two major levels of liquidity that were resting down there as well. Let's go to the weekly chart here. Actually, let's zoom out a bit onto the 2-week chart. So yeah, we do have our liquidity, our big levels of liquidity. They're resting down here at 92K. So yesterday I showed that we have the two major levels of liquidity, the swing failure pattern, or the liquidity above the swing failure pattern that everyone had on Christmas, and then the 92K lows, really 92.1 to 92K is where our two major levels of liquidity were taken. But if we go back to the Bybit chart here, you guys can see that we triple bottomed this flash crash, pretty much triple bottomed it. And I did not like that. I do think for some reason the whales are protecting this 92K area. You know, we bounced from a really strong bounce from it here the first time, pretty much a $2 bounce, but not an SFP here. A third time we barely front ran it, and now we're coming back down again. So this is the relevant range. You can see that we rejected yesterday from the 0.5 and the POC of the range. Now we can extend the range all the way to relevant price action, and you guys can see that the POC has changed, but we are losing. So yesterday we came back down to the value area low. We were able to hold it, pumped from the value area low up to the 0.5 and the POC. And also look how nice this range is. Let me go on to this chart. I believe this range on Bybit is a little bit, no, it's pretty much the same thing. Okay, so we have the range here, and we bounced from the value area low. We went up to that 0.5, and now we're seeing the harsh correction. Now this could be, you guys, like an ABC correction here. And there's two types of price action. There's impulsive price action where you see a move either up or down with expanding volume, with increasing volume, and you get this impulsive wave. When an impulsive wave finishes, you usually see a correction wave, and a correction wave can be a 3-wave zigzag to the downside, like an ABC correction. It could be a WXY. There's a bunch of different corrective waves in Elliott wave theory, but we did see a sort of impulse here, 1, 2, 3, 4, 5 here. The fifth wave ended, truncated fifth wave with the SFP and the rejection of the bigger channel. And so now we could be seeing a bigger correction. But also, you guys, there's something I want to show you here. This could be a bigger ABC correction, a much bigger ABC correction. Let me go to the 4-hour chart. We also, because we obviously had some very explosive and impulsive price action all the way up to the 108.4 levels. And now we could be seeing something like a bigger ABC correction, with the first crash down to 92 being our A wave. Now the rejection of the channel and the SFP of those internal highs being our B wave. And then our C wave could come back down to 90K, maybe even 85K. One of the ways we can measure the C wave target of that wave is we can take a trend-based Fibonacci extinction. We go from the highs of wave A to the lows of wave B. I'm going to change that because that's wrong. So the lows of wave B here, and then to the highs of wave B, and then you get your C target. Your 1-to-1 is often a area where the ABC correction will end. So look at that, 85K, which is also the liquidity grab of these lows of the beginning of the channel's price action, you guys. And remember, I say when we break these ascending channels, oftentimes we'll come at least for the second pivot, which is at 90.6, and take the liquidity of the second pivot of the channel. Or if not that, we will come for the lows of the liquidity of the entire ascending channel. So the lows of the liquidity of the entire ascending channel are in confluence with this SFP here, is in confluence with our 1-to-1 correction target. 85K is another level we need to be watching. Now we do have a daily support area that's around 87K. Let's see if that's not the one. Yeah, so 87, we do have a fresh daily at 87K. So this general box of support we could be looking for. I still do think 90.6 is a level to be watching. We play it level to level. So first we're going to look for the SFP of these 92Ks, the triple bottoms that we have. But I wouldn't be surprised if we do continue lower off of this. We need to be watching this. We could SFP these triple bottoms here, come back up, continue this B wave. We could still be in this B wave, and then we could continue down. So we need to be watching for that on Bitcoin. But right now, we trade what's in front of us, right? We trade the range until it breaks. We trade the relevant price action. And right now, the relevant price action has been this price action that since we lost the channel on December 19th. So we're just going to watch this range. We are seeing some concerning things on this range. First of all, let me stay on the 4-hour real quick. Money flow continues to leave aggressively, showing me that we could see new lows, but we are setting up for possible bullish divs here because we do have this momentum wave is quite a bit higher than the last low momentum waves. So if we do come back down in SFP, these 92K flash bottoms, you could see lower lows on price action, higher lows on the momentum waves. Hopefully by then we'll start to see some signs of money flow curving to the upside. And that could give us a 4-hour signal, at least even for just a scalp or a day trade from these 92K triple lows that we have, semi-triple lows that we have. But this flat-like correction wave here, you can see we had our A wave here, and then this is kind of a flat correction wave, and then we might see another wave down to the downside. So it could be in, and we could flush all the way to 85K from here. We won't know until we get down to this level. We are going to have to check this level. Let's go on to the daily chart here real quick. Let's see. Let me get rid of this here. And let's zoom in on Market Cipher B. So you guys, a couple people have asked me what this indicator is. This indicator is called Market Cipher B. This is an indicator that CryptoFace created. It's a great indicator in my opinion. Money flows so on point with this indicator more than any other indicator I've seen. And the momentum waves also work really well as far as divergences go, like bearish and bullish divergences. So, and it is a paid indicator though. You don't have to use this to be successful in trading. Price action first, indicator second. Follow your price action and your key targets first. Those will always, I know plenty of traders that don't use indicators at all. Bowen uses barely any indicators and White Phoenix uses barely any indicators. They are absolutely excellent expert traders. So you do not have to use indicators. It's just my style. I like to use this for confirmation, whether to get into trades or not. And then of course, CVD is also really good. CVD divergences are also good. And you can use a free tool called coinalyze.net to get into CVD, look at CVD divs and or possible absorption. So yes, okay. Let's look at this real quick, actually. Nothing too much there on Coinbase. Let's look at Bybit. Well, you guys can see this just recently here, since we rejected from that 0.5, we see a lot of longs coming in, but price is continuing lower. We kind of see bearish absorption happening from that 0.5. See, the 0.5 was here. You can see longs continue to come in. OI is increasing, so those are new positions that are opening up, but the price is rejecting. And those new positions are long because CVD is increasing. So we might actually start to see a short squeeze soon. If we lose 92K, we could short squeeze down to 85K pretty quick, depending on how many trapped shorts we have, or trapped longs we have. Okay, so let's go back to this chart here. One thing I'm going to cover again, because this is really important. When we see a bigger ascending channel like this, like a bigger, higher time frame channel like this, and you break it to the downside, you often come up for a quick back test right away to either reestablish the trend or confirm rejection. So we had the back test, we rejected, and then on a higher time frame, oftentimes you'll come up for a second time after losing it and starting to range a little bit. You'll come up for a second time to backtest to confirm the rejection and continue to the downside, or to either get back in, reestablish trend, and continue the trend. Now, you guys are starting to see this pretty clearly. We are rejecting from the backtest of the channel, and it looks like we are going to at least come for these 92Ks. I've been harping on these 92K lows for about a week now, and I just really think that market makers do not leave this kind of liquidity sitting below. Even if someone's fiercely defending this, we do not usually see this kind of liquidity get left. That's why I was so strong in my bias that we are going to come take these semi-triple lows here. We can do a fixed range volume profile pull of this intermediate price action range after the last parabolic impulse of structure. We kind of been going more sideways. Now we are finally starting to lose the value area low again. This is not a good sign. If we do close this 4-hour candle below that, I would pretty much guarantee we're going to come for these 92K lows or even lower. So we need to be watching for that now. Let's go to a couple other things here. All right, we talked about that pitchfork, and then let's check these two pitchforks here. Okay, so you guys can see actually right now, Let me hide some of the stuff on the chart so I can clean it up for you guys. We are still chopping in this. You can see we rejected from the top of the pitchfork, almost perfect. We've been holding this band as support, especially this 0.5 lower part of the upper band. I know that's confusing. I call this the upper band of the pitchfork. This is the midline. This is the lower band, and then the bottom of the pitchfork. We are in the upper band, and you can see last time we were in the upper band, it did eventually end up holding, and then we got that parabolic move up after we finally held it as support and decided to move up. Then we were trying to hold the top of the upper band. You can see 1, 2, 3, 4, 5. We did see some wicks below, but closes above, and I bet you on the daily, those are all closes above that upper part of the band. Here again, after dropping to the bottom of the band, we came back up, then dropped to the bottom again. So right now we're working this bottom band of support is trying to hold. We are about to lose it right now. We are at this level right now. So if the local 786 doesn't hold, let's zoom back in onto the 1 hour here. We can look at the relevant price action. We can pull the range of the relevant price action that's being traded. So like this here. And let's pull the 786 from the last low to the high. Looks like we're hitting the 886. Yeah, we're bouncing to the dollar from the 886. So we could see a small bounce here, right where we're at from the 886. What we could see, you guys, right now is a move back up to the value area low and then a continuation down. Usually when this 886 gets hit, so we keep hitting 886s or below on this. So hit past the 886 on this one, made a new high, hit into the 886 on this one. It's really looking like Bitcoin's coming for these 92K lows. It's not guaranteed, but it's a very high probability. Very, very high probability. We still are in a low volume holiday week. It's a Friday, I believe. Yeah, it's Friday. And so we might just continue to chop low volume, but we are starting to see a bigger wave to the downside here. A bigger, I wouldn't call it impulsive. One of the things that I didn't cover properly yesterday that I realized later is the reason why I took this SFP short up here on Christmas of these highs. You can see that we got the confirmed SFP and we were making bearish divergences on the hourly and a couple other time frames. You can see lower highs in the momentum waves here, higher highs in the price action. That is confirmed bearish divergence on a confirmed swing failure pattern. I will take that trade every time. Even if I lose it, I'll take it because it's worth the risk. What you can do is once you see this make a new high above the swing failure pattern here at 99.6-ish, you wait for the drop to happen. You wait for the level to be lost. You put your stop above the high that was just made. You give it a little bit of breathing room, and then you could bring it down to your next, what my TP1 was the golden pocket that we bounced from yesterday. So that was my TP1 just there. It's a 7 to 7.5 risk reward ratio just from there. And then you can leave half of it to run down to the 92K lows. Like, look at how good of a trade that is, you guys. If you take only the trades that are in front of you, let the market come to you, be patient, trade the range that's in front of you, trade the relevant price action, you can be very profitable. Don't force yourself into trades that are not there just for the sake of it, just for the sake of being in a trade. Over trading will get you wrecked. It's part of trading is psychology and learning when to sit on your hands, learning when to take a proper trade, learning when to take profit on those trades. And I hope as my channel grows and as I continue to make videos, I can help you guys learn some of that stuff, because I really do really appreciate you, all of you that subscribe to my channel and support me. And the messages and comments you give me are so overwhelming with love, and I appreciate it so much. So I do want to help you guys learn to get proficient yourselves as well. So thank you for that. Yeah. All right. So we're seeing a small bounce from the 886. I do think 92Ks are coming. 92K flash crash bottom is coming. It might be today, actually. Let's see how this goes. So the confirmed bearish divergences at the SFP that we had, you can see money flow is going down, and we did have a trigger wave. A trigger wave is a smaller momentum wave topping out after a bearish divergence. So you see we had the confirmed bearish divergence up here. We dropped to the golden pocket. We did not see bull divs at the golden pocket here because we did not make lower lows from this first low here. And now we rejected from the POC. of the range that we had yesterday. The POC's changed since then, but if we pull it like to this price action here, you can see we rejected from the POC in the 0.5, and now we're going for new lows. So this is kind of my update for today. I'd be watching level to level. Let's watch the SFP of the 92K lows. Then we can watch the 90.6K, which is that intermediate SFP. But really, what's starting to look pretty good now is this area of support. Now, I know this is a huge $2,000 area of support. I would trade them separately. We do have that there. Let's actually zoom out, or let's put on the session volume profile, and let's see if we have any naked daily point of controls down there. We do not. Okay, and then also, you guys, you can see we still have that fresh naked up there, and that's in confluence with a different golden pocket. I've showed you guys that in past videos. Let's check now order blocks here. Fair value gaps, excuse me. We do have the fair value gap that's a little bit below. The pitchfork midline is at 80K, depending on how quick we get there. Let me show you guys one more thing, because a few weeks ago, right when I was starting to make videos, starting to make my channel, there was one level, one key, bigger logarithmic channel that I kept harping on. And many of you that are in Jason's Discord will remember this. So let me clean up this chart real quick. I'm just going to hide a bunch of this stuff here again. Okay, so we had, let me go back out onto the weekly chart. This was a very important logarithmic channel based off of, and look how well this channel's been respected on the weekly time frame. I mean, you know, and I took this channel based off of the last two major cycle highs of Bitcoin, the 65K all-time high, back up to the 69K all-time high, and then you bring it down to the lows here of the bear market. So that's that there. And you can see, look at, even though this price action is before the channel was made, because trading is based off psychology and sentiment, you can see that even the past price action was respecting this channel to the dollar pretty much. I mean, here, lost it to the downside on the weekly, came up on the weekly chart. Let me zoom into this so you can see this. Came up on the weekly chart for the bearish backtest on the weekly, confirmed the rejection. We dropped really far, continued the bear market, bottomed out on the bear market, flipped the midline. Once we flipped the midline, we came back down, tested it as support, pushed up to new highs. And now, I did talk about this the last few weeks ago. You can actually go watch some of these videos. One of the videos I made was a mobile video. We do have, I said it wouldn't surprise me if we consolidate up here towards the top of this for a few weeks and form a distribution pattern and then see a dump back down. Now, I would be looking not to the midline. I'd be looking for a dump to those 70K levels right before the big breakout. The value area high here at 70K of this 7-month range that we consolidated in prior. We also can do a fib pull on the last weekly low to the weekly high, and let's go to the golden pocket. You can see the golden pocket is right there as well, you guys. So it could be, this is kind of like a worst case scenario, but we do need to just keep this in mind, okay? We have the value area high of our prior major range, our major monthly range, that 7-month range, in confluence with our golden pocket here of the last big weekly push up from low to high, our last big weekly push up. So we are starting to finally lose this channel. We were able to peak above it for a little bit, but okay, now that you guys seen this channel and seen how well it's been respected, let me go in onto the daily chart and we'll look at this channel. So you can see the first time we kind of hit into it, we didn't really reject. We formed a sideways range, but you can see how well it's been holding after we broke it to the upside. It was really trying to hold on the daily as support, you know, wick below but close above, wick below but close above. Found it as support, made new highs, wicked below but closed above. And then now we're finally starting to lose this channel. If we don't take these lows here, if we don't SFP at least these lows here at 92K, not that one, 90.6, that key 90.6, because what we can be looking at is, remember, after this last parabolic push up, a more sideways price action. So after the parabolic push up ends, you could pull your range here, sideways price action. And then you can also just pull that fixed range volume profile from the entire ascending channel, and you can see that our value area low is right at that 90.6 SFP. So that's why I've been harping on that 90.6 SFP so much as well, because it is the value area low of the entire price action of the ascending channel. If I go to that ascending channel, not that one. Let's see here. Where do I got that sucker? Anyways, you guys know which ascending channel I'm talking about. This one here. High to high. Bring it down to this low here. This ascending channel. So we do have our second pivot of that ascending channel at 90.6, which is if we also pull the volume of this entire range since the ascending channel, you can see the value area low is down there as well. So first level to be watching is the SFP of the triple lows at 92K. Second level is 90.6, the SFP into really more like 90.3. I would look for the SFP of 90.6 into the value area low at 90.3. And then look at 85, 87 to 85, you guys, because we might come down there. If we lose 85, there is a very high probability that we do come down to that 70K retest of the value area high of the prior 7-month range and that golden pocket. Now, that's just something we're going to have to wait for to watch and see. We do not know what's going to happen yet, but we can look at possible setups on more macro time frame analysis to look for. I'll tell you what, if we get down to 70K, that's going to be the mother of all longs, like Jason said, the mole, the mother of all longs, to be looking for a long to bring it up to new all-time highs, and that would be fantastic. And alts would really bleed too, so it would give us some great opportunities to re-enter some alts that we missed out on. All right, so that's my update for today. Look, at you guys can see on the daily, money flow is starting to curve down, and we are starting to see what Jason calls the butt cheek blowout. So this is kind of, we are not going to see, looks like bullish divergences on the daily. Even if we take the 92K lows, we do have lower lows on the momentum waves now. So I do think that we might do something like this, come down to take 90K here, maybe even go to 85K, and then make a push up. We might see this momentum wave bottom out and then make a smaller one and then see our bullish divergence here. Well, yeah, then we would want to see another low there too, but you guys get the idea. We'll look at that. That's too speculative anyways. So that's it for today. I'm going to make another altcoin video. In the altcoin video, I'm going to cover RSR, Flux, DOT, S Fund, and Wild. Hope you guys have a good day. Peace out.